Hi, I'm Rusty Vernon, President and Chief Investment Officer of Vernon Management Group. If you're new to these videos, today we're going to be discussing technical analysis. Specifically, we're going to be discussing technical analysis of an individual stock, how to make a purchase on a timely basis, and also how to limit your risk. Hi, this is Rusty Vernon from Vernon Management Group. Today we're going to be talking about technical analysis. Specifically, we're going to look at some individual stocks and trading box to box. So we're going to start here with Google. I think it's a good one to take a look at. Google and a lot of the AI stocks made a big move in the month of May, and we are on the last day of May, so probably a pretty good time to take a look. So one of the things you really want to look for is, is the stock trading above the 200-day moving average? And if it is, at that point, you look for a consolidation of some sort, because you want to try to have a specific buy point and a specific sell point to work with. And trading box to box, and I will illustrate that in a couple of minutes, will give the investor a specific buy point and a specific sell point. So let's get started with Google. I've already highlighted a couple of these boxes in green, but Google right here, around the 2nd of February this year, made a high of $108. And then it pulled back, during the first quarter all the way down to $88, and then retraced that move back to 106 and formed a resistance point. A lot of people would term this a cup and handle base, with this section right here between 106 and around 99, the handle portion of the basing period. And if you note, I have a blue arrow here. All of a sudden, there was a breakout above 106 and also above this 108 number when the stock moved to 109.17 on April 6th. That was a really, really good day to buy, and you can see the volume spiked as well. Now, from that point, we had another sideways movement, and then another breakout day that I'm marking here with a red arrow. So if you miss the 109 day, back here, there was another opportunity, and the stock was up less than 5% from its breakout of above the handle here at 106. So you had two opportunities to buy the stock. Let me take a look at what the price was. The closing price on this day, it was 111. So the breakout was 106. This day was 111. You're within that 5% range. You really don't want to chase the stock too far above, its breakout point. 5% is a good chase zone. And since then, right here, you can see the stock is up 16% from its pivot in just 38 days. And I guess the key here, for a lot of investors is, when do I buy? And if I'm wrong, when do I sell? Because the worst thing any investor can do is to, buy and hope. You have to have your sell point predetermined prior to the purchase, because you want to let your winners run and you want to cut your losers short if possible. So you can see this 106 breakout, the low was 99. So there was only about a 6% handle here that you had to deal with. So you could, if you can lose 6% when you're wrong and make 20% when you're right, you're going to end up making money in the long run. And then again here, you could have added to your position at 111 and, maybe had an average of about 108 or 109. And now the stock's trading at 122.99. The key, again, are these box periods. They really do offer, and you'll note here the lows of this handle at 98 and the low of this period is 102. And we the stock seems to keep making higher lows, which is really important for an uptrend. Right now, as far as I can tell, we're starting another sideways period, um, and the next breakout should be something above 126. So that would be something to watch for. The closing price of that day. Okay, now let's take a look at Nvidia. Nvidia was much in the news over here on March 25th. The stock, moved up 24% for the day after they announced earnings. And I think it got all the way up to almost $420, and now we're sitting at $385 here on the last day of the month. But if you'll take a look here, Nvidia started trading above the 200-day moving average, or its 200-day moving average, on the 13th of December last year. Corrected all the way down about $50 to 138, and then crossed back above the 200-day and broke out of this box formation on the 23rd of January. So Nvidia has been a story since the 23rd of January. And if you'll notice these boxes here, the lows of each one are progressively higher. You can see 138, 204, 222, 262. And then let me see which the price of this one. Yeah, 272. So what you really want when you're trading a stock is you want to see those higher highs and higher lows. And then you can trade off those numbers. So if you're a buyer here at 188, I mean, it's pretty far down there, but the failure is if it goes below 138. And then we had a breakout here at 236, and the sell point was 204, which was put in, just a day or two earlier. But it never got there. And then eventually, moved out of this box, and I guess on, the beginning of April started to form another sideways pattern. And then here we go once more. There's another breakout from that sideways pattern at $289. Then we go sideways for 3, 4, 5, 6, 7, 8, 9, about 10 more days. And then we get another breakout before earnings at 292. So there were multiple opportunities to buy Nvidia if someone were using, trading box to box. And the box to box approach was, I think, created and made popular by Nicholas Darvis. Nicholas Darvis wrote How I Made $2 Million in the Stock Market, and he also had a second book called You Can Still Make It in the Market. But this is really important for someone who's trying to be able to time the purchase of their stock and limit their downside and try to stay in the stock as long as it continues to make higher lows when it goes sideways or when it starts moving up, and makes higher highs. And you can see these are just like stair steps. We'll see what happens with Nvidia over the next couple of weeks, but right now it is still a hold from where it was, about 2 weeks ago. Let's take a look at Meta or Facebook. Similar thing. We'll go through these kind of quickly, but we had a box formation here. Facebook or Meta broke out around the 16th, 15th, and 16th of March. We had a move up, a pull back. Then we had an earnings, a gap up here. Had a box formed. It broke out at 245 on the 18th of May. And, we've continued higher from that point. So if you're looking for a place to buy any of these stocks, wait for the stock to form another sideways pattern, I call them, a box formation, and look for a breakout of that box. You have to be patient. That's really the hard part. But if you're patient, you'll get really good buy opportunities with limited downside. Let's look at Tesla. This is kind of interesting. Jesse Livermore came up with an approach that I think he called, shakeout plus 3. And in some of his writing, and he traded literally 100 years ago and more. He would use a $30 stock, and if it broke through resistance to the downside but then came back up, he would say if $30 was the resistance but then it came back up, he would buy it at 33, or shakeout price of 30 plus $3 would be a 33 buy point. Well, these days a lot of guys use that same approach, but instead of 3, they'll say 10%. So Tesla here formed a cup and handle base with a 163 low back in March of this year. It broke out above this handle, but then immediately started to fall apart, and it dropped to 152. Well, if you use the shakeout plus 10% approach, if you take this 163 number and add 10% to it, you get 180.30. And you can see, let's just take a look. Yeah, right here. On the 19th of May, Tesla stock crossed above, 180. And actually got to 181.95 and closed at 180.14. So that would be your buy point. So that would be right there. And currently, the stock is trading at 199. Now, this one's a little bit high risk because it's still trading below this long-term trend line, which is the 200-day moving average. In most cases, you really want to try to isolate your purchases to stocks that are trading above the 200-day moving average. Let's take a look at Netflix. Netflix, one of the things we all try to look for before a purchase is, does the stock have a prior uptrend? Well, you can look at Netflix, and the stock moved from 250 to 380. So there's a prior uptrend, formed a cup with a very long handle, but this handle was only 10% deep. And then here we go on earnings, or news, I think it actually was. On the 18th of May, Netflix broke out and went up 9% and crossed this $380 pivot. And here we go. We've got the higher lows that are being put in. 285, 315, back here 273. And that's really a sign of a potential winner. And then from there, you just kind of sit and wait and make sure it doesn't fall back below the low of the box that you've drawn on your chart. And currently the stock is 13% above the pivot in only 9 days. So let's move on to another one. This is Workday. Workday has formed 3 bases or 3 boxes, without much progress. But I think they had earnings here 2 days ago, and the stock broke out above 206. And so this one, this one's a buy right now for people who are using a system like this. It's a first stage base, and actually, stage one, stage one, stage one, and you really, there's no second stage base until there's at least a 20% advance. But this, you'll note that the lows of each base are higher here by just a penny or two, but definitely higher. So anybody that was trading this one should not have been stopped out since they purchased the stock right here at about $185. Hey, thanks for watching today. We'll be posting a couple of times a month. If you have anything that you're specifically interested in, please comment below and we'll try to post about it.